I'm Jefflyn Dangerfield. I am a retirement strategist and an author. I have a book that's out, the Retirement Trilogy. I'm a financial advisor as well. I specialize in safe money products, and that has to do with insurance and safe investments.
So now in your book, you mentioned about the retiring on your own terms. So please explain to us what retiring on your own terms means to you.
Retiring on your own terms means retiring at the age when you want to, with the amount of income that it will take to sustain you for the rest of your expected life, and comfortably, actively, socially, mentally, spiritually, the way you want to do it. So that's what defines on your own terms. Not just making sure you have enough money, but making sure that your lifestyle fits and that you can enjoy the rest of your life.
Yeah. Excellent. Okay. And my next question is, how should someone prepare for retirement at any age, like starting today?
Perfect question. To begin preparing for retirement, the first thing you would need to do is calculate what your retirement number is going to be based on what age you're choosing to retire. So if you are 25 and you say you want to have $1 million when you retire, then you would calculate the number of years from that by the amount that you say that it's going to take, which would be that $1 million. And then that will show you or tell you how much you would have to save to ensure that you have that much money when you do retire. So let's give an example. Normally, it's about 10% of your income with starting. So if you're 25 and you are making $25,000 a year, just rounded off, you would have to put away $2,500 a year to ensure that you meet your retirement goal. Now, as your age grows up and as your income goes up, then of course you need to put away more money to ensure that you're meeting your retirement goals. So if your income goes up to $50,000 as opposed to putting $2,500 a year away, you would need to put away $5,000 a year. Your income goes up to $75,000, then that's $7,500 a year, and on and on and on. That's if you start at 25. Now, if you start at age 50, which a lot of people do, they start later, then of course that means that you would need to increase the amount that you put away. 10% won't be enough for you because you're making up for that time that you hadn't saved before.
Exactly.
So you can average that as opposed to at 50, if your income is, because you would assume that you would be making more money. If your income is at $100,000 a year, then as opposed to $10,000 a year to put away, you would need to put away maybe $15,000 or $20,000 a year. And you can break that down in smaller bites, of course, monthly, by dividing that by 12 months. And that will show you how much you need to put away to ensure that you meet your savings goal. And that's if you're averaging to retire between 60 and 65, which most people start to consider that's the age. But what happens if you say, oh no, I want to be done by 55 or I want to be done by 50? Then of course you have to add a little bit more to that to ensure that you meet your goals, and also add a little bit more because as we can see, inflation is not going to stop. So you need to add a little bit more to ensure that you keep pace with how things will grow as you grow.
Yeah. Excellent. That's perfect answer. Thank you. Now let's see. What are 5 tips to stretch money for retirement for people today during this time of inflation and supply chain shortages and all?
First things first, in regards to stretching money. You can always save money. It's, most people say, well, I just don't have it. Things are going up, da, 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 da. I always give people this tip that my grandma passed on to my mom, which passed on to me. She used to take dollar bills, um, and for whatever state you're in, there is a letter that they put on the bill. For California, it's F. That's where I am in California. So any bill that had a letter that she'd receive in return that did not have an F on it, she just put it away. She'd sock it away. So at the end of the year, one year she had over $6,000 in extra bills, but that's when we were exchanging more currency. Now things have gone more digitally. So the same concept is allowed to happen with putting your coin away, say for instance, in places like Acorn or the savings programs that they have where they say, do you want us to invest your change in your savings account? That simple thing right there will afford you the opportunity to save money without it actually impacting what you're used to receiving. So the second thing I would suggest in regards to saving, we all have little things that we do for ourselves. Say, for instance, like we like to go to Starbucks, or we like to go, to Krispy Kremes, or we like, the little things that we like to do for ourselves. Well, most of us, once we get in the habit of doing that, we go to Starbucks maybe 5 days a week. If we're working 5 days a week, we treat ourselves to a coffee, and it's generally a large coffee. Well, just cut down on the size of the coffee. Don't cut down on your treat. Just cut down on the size of the coffee. And instead of it being a large, make it the smaller size. Because most of the time you don't drink all the coffee anyway. And once it gets cold or it's left in your car, you don't take it in the house and reheat it. You go and you buy another cup the next day. So instead of doing that, downsize your coffee and take the amount that you would have spent on that larger size coffee and put it in a sock or put it in a savings. That way, if you're buying, or let's do another option with the same illustration. You buy coffee 5 days a week, you drink half a cup of coffee a day. As opposed to buying 5 times a week, make yourself a cup of coffee at home with your little Keurig, because you have one, and only buy coffee 3 days a week as opposed to 5 days a week, and put away that $2 that you would spend. Instead of spending it all on coffee, now you're putting away part of it in a savings. I also like to say, for people who are entrepreneurs, say hairdressers or barbers, or people who are cash and carry businesses, is what I call them. They work per client. That's how they guesstimate how much they're going to earn. Well, if you're looking to develop a saving strategy, you do this anyway. If there's something special coming up for your child or whatever, you'll do an extra head or two to make sure that you have that money. Well, do an extra head a week for your savings account. Put that money away in your savings. It's the same principle, but now you're taking care of you as opposed to taking care of everybody else. You're paying yourself first. That's what it's called. Now, the third thing that I would say as far as saving money is concerned, we all know, especially now with COVID, we have stopped doing a lot of the things that we used to do. But we've increased our DoorDash or our Grubhub or whatever you want to call it. We've increased that, you know. So instead of doing Grubhub 3 times a week or 4 times a week, because it's just so convenient and it's so easy to do, and you've been stressed out with the rest of your day with working from home and kids and everything else, instead of that doing 3 times a week, do two and use one day and put it into your savings. Your budget is still the same. You have not changed what your normal spending habit would be, but you've allowed yourself to pay yourself first. That's the third thing of things that we do on an ongoing basis. Fourth thing I would suggest is budget. Period. simple budget. Most people would have made that first, but I understand the climate that we're living in. We've already sat down and we've said, okay, we have the same amount of money. Things have increased 3 times. The shelves are not as full as they used to be, and I'm paying twice as much for what I used to pay. You know, a gallon of milk, if I can find it on the shelves, may have been $3. Now it's 5. You know, the cost of gas here in California is ridiculous. It's almost $6 a gallon. But you still have to go to work every day, and your paycheck has not increased at all. You know, those types of things. So the first thing that I would do is make a budget. And on that budget, use certain things that you took as non-essentials or stuff that you would just normally do on a regular basis. It's going to take some prioritizing. Some things are now going to have to be rewards or gratifications as opposed to, oh, I know I'm going to have it. You know, especially ladies, and it's sad to say because we are in such a climate where our appearance is so important. But that nail thing, realistically, if you're getting what do they call it? The tips or the extensions or the fields or whatever the case may be, you can go a month and still be good if you file that backside down. Won't nobody know. It's cheaper to buy a bottle of nail polish and a fingernail file than to spend a whole however much time that you have to drive to the nail salon. You have to get your mask. You still have to wait. It's still social distance, the whole nine. You still have that. So consider those types of things. I don't say cut out, I say cut back. All things in moderation. And then the fifth thing is really, really simple. Make it up in your mind that I'm worth the sacrifice and put away for yourself first. We, especially as women, are so accustomed to taking care of everybody else. We'll give everybody else our last dime. But when it comes to ourselves, oh, I can't, I got to do this, I got to do that for everybody else. Prioritize yourself. Make your retirement, make the last years of your life as important as the days that you're living now. That would be tip number 5.
That was awesome, and I love the story about the dollar bill with the letter. That's really a good story. I should try that sometimes.
Yes, I
Yeah.
don't know what letter it is for the state of Georgia,
Uh-huh.
but you'll get the majority of bills that you'll get if you're exchanging cash will be from your home state or from your home area.
Okay.
Anything that's outside of your area, just put it away. And my mom used to clip them in 25s, groups of 25. So
Okay.
that way she know how much money she'd have. And we call it house money.
Right. Exactly.
So
Yeah.
always have house money around
Okay.
because of that little nuance.
Yeah, that's awesome. I tell you, our grandmothers had some really good ways of like saving money. So I appreciate you sharing that story.
Yeah.
Yes.
Sage wisdom is still good wisdom. It's still the
Exactly.
best thing to do.
Yes, that's true. Your tips were really awesome. So let me see. Okay, and actually, you kind of went on my next question. I was going to ask you about being disciplined while shopping. So,
Hmm.
is there anything else you want to add about that? Boss?
Oh, absolutely. Absolutely. Shopping is one of the biggest things that we can manage without managing it. Most often, with our busy schedules and running back and forth and maintaining houses and kids and jobs and second jobs and, you know, everything else that has to go on in our lives, what we want to do is what's most convenient. And what often happens if we're still inundated in going into the store, if it's on the end cap or if it's right there in our face, we're going to pick it up. First thing not to do is pick up the end cap because normally it's not on sale and it's higher than the other priced goods. That's the first thing as far as shopping is concerned. The second thing as far as shopping is concerned, especially since we've been locked down as long as we have, getting back out and getting socialized is just the thing to do. So, old school wisdom is just good wisdom. Don't go in the store hungry. I don't care if it's the grocery store or the clothing store. Don't go in there hungry because you're going to wind up buying more than what you need. You're not going to go in there and get what you need. The other thing is, they used to say if you could buy in bulk and if you're single and split it with someone else, or if your household affords that, yeah, bulk items are good and they will provide discount to you depending on what the item is, but only buy what you need. Even if that requires you to have to go to the store more frequently, do not overbuy unless you've got sufficient storage for the items that you're buying, because you wind up wasting more and having to spend more than to get what you actually need. And we're talking about retirement, and that's why I brought that up. Most often in retirement, because we've been active during our working years, whether it's just walking upstairs or walking around the office or whatever the case may be, depending on what the profession is, we don't have that when we retire. When we retire, we're normally sedentary. So if we have not attached an activity plan to our expense plan, we can encourage more expenses on the health side of things because we've not maintained a healthy lifestyle. So that is just as important as planning financially, making sure you have a fitness outlet. And that doesn't mean go join a gym and be there 5 days a week, 3 hours a day, trying to look like, Dwayne Johnson or Holly Berry or something like that. No, it doesn't mean that. It just means to keep active enough where we function effectively enough where our system doesn't break down and we don't begin to have health issues in our latter years.
You are outstanding. So thank you. It's very good advice as well. I would like to ask to explain the process of setting a budget.
Explain the process of setting a budget. Really, really simple. First thing you do is write down every income source that you have. And it doesn't matter whether it's from recycling cans or, a six-figure income. Whatever income stream you have, if it's you're getting child support or you're getting whatever income you're getting, write that down. The other side of the budget will include what you put out. So write down every expense you have, whether it is annually, monthly, weekly, or daily, every expense that you have, and write it down with the amount that you pay on a regular basis. What is due, what's outgoing. So we know our electrical expenses, or our water expenses, or our gas expenses, or our trash expenses, or our mortgage, or our car note. Those are all things that we know to write down, and we do that. Our food expense, we do that. Don't forget your hair, your nails, your shoes, your cleaning budget if you're putting clothes in the cleaners, your uniforms, if you have to wear uniforms to work. Don't forget that. Don't forget the however much you pay out in allowance to your children if you're still doing that. Um, don't forget those things. Don't forget your entertainment budget if it's Netflix or whatever it is that it's now. Don't forget that. Eating out, your DoorDash, don't forget any of that. Write down all of your expenses. Those are the first two things to do before you even begin to plan a budget. The third thing to do before you begin to plan a budget is, out of the list that you wrote down on both sides, document which things may be going away. If it's your credit card bills, know which one of those and when they will be paid off. If it's child support and it's ending at a certain period, know how long you'll be receiving that money and when it will stop. Those three things need to be in place before you say, okay, let's start budgeting. Because if your income shows that you're bringing in $5,000 a month, but in 2 months from now, you're only going to be bringing in $3,000 a month, your budget needs to be prepared on that $3,000 and not that $5,000. You need to be paying your expenses based on what you know that you'll receive. And another thing regarding budgeting that most people don't do, they've heard of the rule, but they don't use it. That's the 80-20 rule, which is you pay 10% automatically to yourself. That goes in your savings. You pay 10% to your charity or your spiritual influence. For me, it's tithes. I pay 10% in my tithes. And then the third piece of the puzzle is you're going to pay taxes no matter what it is when you retire. So I have a third bucket, which is my 30% of 10% that I put away for taxes. I live off of 70% of my income. So when you talk about developing a budget, I develop my budget on 70% because I've taken that 30% off the top and I don't include it in my income. Most people don't do that. When they budget penny for penny. That should never be the case. Any good business person will tell you you always have to have a contingency fund. That means you always have to have a little cushion. That's why they used to call it, you put some in a sock for a rainy day, baby. That's what they used to say. That is always the case. So when you do that, when you plan a budget, you never plan a budget on 100% of your income. You always have a cushion. And most people don't do that. And that's why they run out of money and they get mad about it because, say, for instance, you're getting something repaired in your home. Every contractor is going to come back and tell you, well, it took longer. The materials now cost more. It's going to happen. So prepare for it up front. Don't, if it doesn't happen, the good thing is you want to run around and you want to shout and have a good time on the fact that they tell you that it comes in under budget. But I can almost promise you that will never be the case. So prepare for it going in the door.
Okay, you're awesome. I'm just smiling over here because everything you said is so true. As far as I'm having work done at my house, so I'm laughing at that. Like, yes. So my last question is to please explain to us the Retirement Trilogy and all about your podcast and also the highlights from your book. So thank you.
Well, I'm very, very excited about the Retirement Trilogy because, as you can see, the information that I provide is simple, it's helpful, and it's practical. I've been in the financial services industry now for probably about 12 years. And in doing so, financial people have a language, just like medical people have a language, just like attorneys have a language. And most often, when they begin to talk financial ease, the average layperson gets, it's like a deer in the headlights. It's like, what are you saying to me? So my goal for the podcast as well as for the book was to break things down in sizable chunks where everybody at any age that was looking to begin the process of developing a retirement strategy could do that. In the podcast, I'm not the only one speaking. I have different experts that come in that share information regarding additional strategies that can be used to elevate what you're doing at retirement to make sure that you're on track to do exactly what you need. I have nutritionists, I have psychologists, I have people who talk about maximizing pensions for people who have 401ks and actual pensions from their job. I have different people who come in who just explain what a retiree is because, now we have a lot of people who are semi-retired. they've had more than one career or more than one profession in their life, but they're still working. They're still out there and they're still drawing an income. But in their mind, it's like, no, I'm retired because I do what I want when I want. I only do this because I want to. And that's the other one of the other things that we talk about as far as the book as well as the podcast is concerned. Retiring on your own terms. It doesn't mean when you say that I'm retired that you stop working or you stop being active. It just means that you do what you want when you want to do it. And you can do that because you prepared for it. You have that undergird and that current to take care of you. So if you never want to walk back into a job setting, you don't have to. Or if you've been a executive or a CEO at a firm and now all you want to do is go to Walmart and shake hands and greet people and say hi, how you doing every day, you can do that and do it comfortably and because you want to. So those are the type of things that the book outlines. That's what the foundation of the podcast is about. And that's really what my whole strategy regarding retirement is about. The word trilogy is just that. It's going to be a 3-book series. I'll have another 2 books that are coming out sequentially. There'll probably be one the first of 2022 and then one again that following year. But they'll talk about specific things. We have different chapters outlined in the book now that gave you the introduction. The next book will probably be geared a lot around women and the challenges for women in retirement, the differences that they beset them that are not, men don't have to deal with, and how to just, step it up, how to get in a place where, we are not in a position of being secondary as far as retirement is concerned. Normally, financially, when you talk about financial services, it's a male dominated thing, just like a lot of other careers. So, how to take advantage of what we have and make the best or better of it, which we normally do anyway. So, that's pretty much all as far as the trilogy and the podcast is concerned, other than I'm just very excited about it and very excited about being able to share and help as many people as possible.
Wonderful. Well, congratulations. And so in closing, I would like oh, I think it froze again. And I'm sorry, we're having some rainy weather, so I guess maybe the internet's kind of sketchy today. But
Yeah.
but yes, I want in closing to announce your name, your podcast, and where people can buy the book.
Okay. Well, again, I'm Jefflyn Dangerfield. I'm the host of I'm Your Agent, a podcast geared towards education, information, and allowing you to retire on your own terms. I'm also the author of the Retirement Trilogy, and it is a book that provides tips that come from the podcast. It is simple, it is helpful, and it is practical. Easy read, 100 pages. If you're a reader, you'll be done in a couple hours, but I promise you, it will bless you.
Amen. Absolutely.
All right.
Okay. Well, you were outstanding, and I will definitely have to bring you back for more advice because you explained everything so clearly, and it was just very thorough. So I appreciate that. So we will definitely meet again. And
Anytime.
yes,
Anytime, Lisa, just let me know.